Good evening, everyone. It's Sunday, the 15th of January 2023, and I'd like to say welcome to the first market structure break pre-week market analysis of the S&P 500. What's my aim today? You can already see it. Define the key areas and levels of price that you might want to do business at, and break them down into possible midterm trade scenarios and also rather short-term trade scenarios. So let's get started on the higher time frames, meaning on the weekly chart. For that, I always like to first of all switch to the line chart, as that makes it easier to determine the trend, because this should always be your first question, obviously. What's the trend? This is my trend box, and it gives you a very simple overview of what you're actually looking for. Are we in a downtrend? Then obviously we want to focus mainly on shorts. Are we in a transition period, meaning no clearly established trend yet? Then we might already have established a new uptrend, but the longer term downtrend, as you can also see in this very basic drawing of mine here, might still be unbroken. Or are we already in a real uptrend? In this case, we would assume that the longer term swing point for the downtrend has already been broken, and then we would obviously focus on longs, looking for retracement areas at where to do business. So what do we see in our case? It seems that we are in kind of like a transition period. Yes, we have established a new weekly uptrend, but our first of all, swing point here, the last lower high on the weekly has been broken on a closing basis, and secondly, the last decisive swing point before a new lower low on the weekly time frame has not been broken yet. So let's mark out these levels. On a closing basis, weekly time frame, around $4,280. This should be broken if we really want to establish and talk of a decisive uptrend, or the area around 4,080. That would already also do at least for a move up to this next area. And then obviously our last swing point here, which we are above at the moment. The question, however, is this for retracement before further downside, or is this the higher low we were actually looking for before a move further up? If you are looking for key levels, you want to determine these swing points on a closing basis, but also look at the wicks, because where the wicks are, you normally find liquidity. So let's switch to the candlestick chart for that and mark out our main areas where we might find liquidity. The wick low here, and obviously to the upside, you could either look at the area here, but this liquidity has already been run, and then most likely up here. So trend wise on the weekly time frame, we with that have established that we are in kind of like a transition period. We haven't broken the old downtrend yet, but we have started a new weekly uptrend. To really find the key area that we might want to do business at, let's go down to the daily chart. This is the chart I use to then find my areas of interest, or target boxes as I like to call them. So let's repeat our analysis process on the daily time frame. As we can see, we were in a downtrend. However, this downtrend has already been broken again. Where exactly are we then with respect to retracement levels? If we take this swing high down to the lowest low, we can see that we are in what I like to call a target box already. However, we have even broken this target box to the upside, which for me makes it less strong. So let's see where we stand with respect to the whole leg down, and then it becomes clear that there is a second target box which we are right smack within at the moment. So basically that tells us that yes, we are in the area that interests us for shorting. However, for really determining our entry, we would like, or we would have to go further down one time frame to the 4-hour chart. Same procedure for possible long scenarios. If we turn around our fib retracements and do the same thing for long opportunities, we can see that we are still a bit away from a possible area of interest, meaning the target box on the daily time frame. And only once price reaches one of these areas, well, we are right smack within the short area that might be of interest for us. So we would have to see something develop on the 4-hour time frame or lower to really consider a short, or the opposite idea, once price reaches the target box to the downside, which I've marked out here between like $3,900 and $3,850, we would like to see the development of a bullish setup down there to consider going long. One more thing that I would like to add, and that makes the whole business more interesting, are one, a fair value gap in the area of around 3,950, and then, and this is really interesting, a very, very, very small one down here, which lines up with our target box. So should we get the retrace down to this bullish target box, then we would have further confluence around the 618 with respect to an ICT fair value gap. In my opinion, these are the areas you want to focus on, and as I've said before, if you want to execute, you need to go further down one time frame to, in my case, I always use the 4-hour chart. So basically, what could we be looking for here? Clear deviation could be in the making. Then you want to see it break structure and then short it down. If we go that way, then down here you want to see the development of a bullish for our signal before you take the trend. Now guys, how do you analyze the charts? I'm always interested in new approaches, so comment down below and let me know. Looking forward to it. Let's move on to the rather shorter term analysis. For that, let's hide everything that we've marked out here, otherwise it's just gonna clutter our chart. I'm gonna call it the midterm analysis. Let's hide it and let's start the same process all over again. My short-term trades I want to base on mainly the daily and then 4-hour chart before I go down to my execution time frame, the time frame where I find my entry, which for me is the 1-hour chart. On the rather short term, we definitely are bullish on the daily chart. Let's mark out our key levels on the daily chart as we always want to. Looking at this daily chart, we can see that the long-term downtrend has really been broken already on the 25th of October. However, the then developing daily uptrend was broken again to the downside. However, now since Monday last week, we definitely are in a bullish environment again. What are key levels that we are interested on a closing basis? One level we have here around 3,830 to the upside. Obviously, we would expect some kind of reaction around 4,056. Now, to see where liquidity lies, we want to go back to the candlestick chart. Interesting liquidity pools. The first one we would probably find below these, below this wick. In other words, below 3,890, and to the upside, very similarly to our weekly analysis, above 4,181. Again, we need to go a bit further down in time frames. I would say to the 4-hour chart in my case, to determine where are areas of interest. We are looking for a bullish setup, so we take the fibs from the beginning of our last major leg, which then gives us a target box which starts below around 3,900. This is the main area we would be interested in if we see a continuation of this bullish trend. Are there any confluence factors that we can find that would help us get more conviction into this area? Yes, there is a so-called fair value gap concept going back to ICT, the inner circle trader. As you can see, it has already been interacted with here, so interacting with it again, I don't know whether I would like it. Nonetheless, it hasn't been completely filled in, so yes, it could be of interest. If you really want to take a trade here, then obviously you want to go down to your execution time frame. For me, the execution time frame for shorter term trades is the 1-hour time frame. So the development of a bullish setup within this area would be of high interest for me. Now, obviously, what about all the way down here? As we are in an uptrend in our trend time frame, so the daily time frame, I would consider a short down to this area primarily a hedge and not the start of a new trend. What would I like to see on the 1-hour time frame? Similarly to what I said about the 4-hour time frame, a possible deviation above this swing high, and then a trend change that could give me some kind of entry within a target box here. If you found this video helpful in any way, then I'd like for you to subscribe or leave a comment down below, like the video, and let me know what you thought about it. I'd also like to mention one more time that nothing contained here in this video is financial advice. I'm not a financial advisor. Nonetheless, this is my opinion on the markets, and hopefully you can do something with it. And with that, I'm out, and I say until next time, goodbye and good night, at least over here.